This week on Generating Alpha, I sat down with Collin Roche, a leading architect in modern private equity and a key driver behind some of the most significant value creation stories in contemporary business. As co-CEO and managing director of GTCR, one of the most established and successful private equity firms, Roche has spent decades partnering with exceptional management teams to transform middle market companies into market leaders. Roche's career is defined by his deep expertise in financial services and technology and healthcare sectors, where he has identified and executed investments that have fundamentally reshaped industries. He has served on the boards of dozens of highly successful portfolio companies, guiding them through periods of intense growth, strategic M&A, and technological innovation. In our conversation, we spoke about the methodical, partnership-driven approach that underpins GTCR, how he collaborates with world-class talent, the mental models he applies spotting strategic inflection points in mature industries, and the discipline required to generate outsized returns across multiple economic cycles. It's a rare look inside the mindset of a private equity veteran who has quietly influenced the shape of the global middle market, and whose commitment to world-class management partnerships continues to define one of the most respected firms on the planet. If you enjoy this episode, please follow the podcast and rate it 5 stars out of Spotify, subscribe on YouTube, and share it to anyone else you think might find it valuable. I really enjoyed recording this episode, and I hope you guys enjoy listening. Thank you. Thank you, Colin, for coming on. I really appreciate it.
Likewise. Thanks for your time.
Well, I want to start where I always do, at the beginning. So, start off, tell me a little bit about your childhood, where you grew up, and how you describe that kind of environment you grew up in.
Sure. My childhood was kind of a classic, American. Grandparents were all immigrants. Originally was in New York, right outside of New York City. My father was a fireman in the South Bronx, actually, and one of seven kids. And then midstream through my childhood, we relocated to Southwest Florida. So very different environment culturally and climate and otherwise. But I think I got a sense of both in terms of my upbringing. But I think the stronger point is very much a aspirational, hardworking environment. A sense that if you have dreams, if you work hard, if you leverage your talents, you can make yourself something, you can accomplish something, you can make a difference in the world. So I was fortunate to have that. It wasn't always easy, but I appreciate it much more sitting where I sit, looking back at how that shaped me and give me resilience and other attributes that I've leveraged across my life.
In touching on that topic of a hardworking environment, I've done 41 episodes of this podcast so far, a lot with leaders such as yourself, whether they be investors or operators in the world of finance and investing. And I've noticed that excellence kind of seems to be preceded by either being excellent at something at an early age or having proximity to excellence at an early age. Do you think that was true in any way, shape, or form in your beginnings?
I mean, it's I guess that's harder to say for me. I mean, a classic kind of middle class, emerging middle class, blue collar to middle class trajectory with my parents who are very focused on education and the opportunity for their seven kids. I would say that that sense of excellence really came from my parents, both my mother and my father. But my father, never went to college, but had this. He had a very active mind. True hero in terms of what he did and how he led his life as a fire officer. But also was just focused on the opportunity each of the kids had in front of them. And so I would say that was the excellence was do things the right way, work hard, have values, stay true to yourself. And there'll be a lot of opportunity if you do that. And so that was really, kind of a guiding light to me in my childhood and throughout. And then now, sitting where I sit, living a different life, I look back at the values, what I learned then, and try not to lose contact with those.
Incredible. And after high school, you go on to pursue your education at Williams before going on
Mm.
to work for Goldman. I'm interested because a lot of people on Wall Street don't come from necessarily a liberal arts education background. So, how do you think? Tell me a bit more about your time at Williams and how you think that kind of liberal arts education really informed your view and perspective that you still hold to this day.
Sure. Yeah. And I think it's, what's right for the person and what environment do they want to be in and what are they trying to accomplish. I had some schools I, didn't have the opportunity to go to, and I had some schools I did have the opportunity to go to. One was Wharton, and I knowing at that point I was very focused. I knew I wanted to go into finance and investing. But I came out of a different environment and than many. I knew that I could go the deep finance route of a Wharton or somewhere else. But I felt like coming out of public schools of mixed quality, but not the rigor that some other people came out of. That I could broaden myself socially, academically, at a place like Williams, and it would be a great place to be for 4 years and have that experience, and then still have the potential to get to the exact same place. So to me, that was compelling. I made that. That was one of the first and most important decisions I made in my life. It turned out to be great for me. I really broadened myself in that environment. I made a great group of friends. But I'd also say just the academic rigor and the rewards of intellectual curiosity were fantastic. People who go to liberal arts schools will often talk about learning how to learn, and I do think that is a critical element. That's not to take away from technical skills or things that can be more applicable to your job, but our world changes, and it just changes quicker and quicker. And I found I have really good pattern recognition, really good ability to assimilate different pieces to kind of create a narrative or understand a story. And I've got to attribute some of that to a place like Williams, where you studied a lot of different things. Also, you write a lot, and writing is thinking. And if you write a lot, you learn to think better. You're crafting your arguments, you're refining and refining to get to a better outcome. So if you're in a place where you have many papers and they are fairly harshly graded, you just get better at it, and it helps refine and hone your intellectual processes. And that was good for me, developing that discipline, again, coming from the public school environment I came from, to put myself closer to parity with some of the folks who had come out of much more demanding, rigorous secondary schools.
And you mentioned that before you went to Williams, you knew that you wanted to go into the world of finance. Where did that come from? A lot of people don't have that direction that early in life.
Yeah, I mean, I think somewhere in my early teens. I mean, I developed some confidence, academically and intellectually, throughout schooling, and was rewarded for that, and identified for that. So that gave me a sense of, confidence. I can be successful in the world. But I had an interest in markets. My father had an interest in the stock market, and followed that, and I invested relatively early. So I think that's an important trait if you're 13 or 14 and you're making stock selections and you're aware of the broader world. I think that is a important attribute. I also kind of lucked into a job with a small software development company, and this was in the late 80s, so it was a very different world then. But it just so happened where I lived, there was a software development company that was somewhat relevant, and I became, I had an office job there, and I got tremendous exposure, and that showed me the world of potential, not just finance or investing, but I could get into software and tech, or gee, there's other doors, there's other avenues, and it just kind of energized me professionally. Notwithstanding that, I thought, how does the world work in our capitalist market economy? Ultimately, allocation of capital and markets are central to that. They're not the only thing, but it's an important thing, and that always interested me. Markets interest me for the relevance. They're relevant to everything we do and everything we produce, and I appreciated that at that age. And then also I just felt like I liked trying to make decisions with good information, and be right sometimes. I think investors or people who have that orientation. They want to do the work to be right. It's not just betting, or hoping you're right, or going with an instinct. It's like, what can I do to be right? And that was appealing to me. So I thought investing and finance broadly was a good fit for me. But I was fortunate to have a father, particularly one hadn't gotten to college, who had that much interest and could get me involved in that. And then the world kind of opened to me from that.
That resonates with me from the kind of position I'm in a sense. But I'm also interested because you mentioned the being able to tell a story. When you went to Williams, learning how to tell a story. And I think a lot of people look at the world of finance as a very like quantitative or analytical space, but I think what I've learned over speaking to many people such as yourself is telling a story is one of the most kind of valuable skills one can have. So I'm interested like how you'd categorize like the role of storytelling in
Yeah.
what you do in the broader world of investing in capital allocation.
Yeah, I mean, I would say, it starts with recognizing the world isn't static. The world is dynamic. It's ever changing, and there are forces changing the world. And there's a history. There's a backstory, an origin story, however you want to call it. So and I think the liberal arts education helped in this regard too, because sometimes the most basic questions are the most impactful. Like, why does this industry exist? What forces in the past shaped it to the way it looks today? Do those forces still exist, or are there new forces that are changing it? And there's something of inertia to the old way of doing business, but there's an opportunity to do things differently. So I think I've been successful, as many are, in terms of thinking more in terms of where we are as a point in time that had a past but also has a future. And then I also tend to think that that gives me a sense of, well, where are we going? And that's not deterministic. We're not going to a single place. There's lots of different places that an industry or a company can go, or a stock if you're investing in a stock. So looking forward to, gee, what I try to transport myself into the future, 3 or 5 years or whatever the investment horizon. What might be different, and what are the different set of outcomes that might have shaped this decision that I made 3 or 5 years ago? And so I think that sense of, we're in a dynamic world, things are changing, understanding the forces that are changing those, having the humility that there are some things you can't predict or can't explain, but then thinking through the different scenarios to set of outcomes for me has been a framework that both looking to the past and why are we here where we are, but also looking to the future and looking at scenarios. It's been helpful in how I think about making investments.
History doesn't repeat, but it does rhyme.
Yeah.
And before joining GTCR in 1996, you spent a couple years at Goldman Sachs. And a lot of the greatest investors and operators over time have come out of have come out of Goldman. Why do you think it was the right kind of place for you to be before embarking
Yeah.
on this journey?
Yeah, I mean, I don't know. I didn't work at other places, and you obviously, a lot of successful people came from outside Goldman. What I'd say from my experience, Goldman, at that time in particular, had the uh, focus on recruiting people who were smart, hungry, very strong work ethic, and from all different demographics. So somebody like myself who was from a less affluent situation, but other people from much more affluent. But there was a commonality. I think the partnership culture that they maintained was one of a dialogue and building consensus, and I think that's really important. It's very important at GTCR in the way that we make investment decisions, but that relies on good communication. That relies on a long-term orientation. You need to have some common values. I think it's important not to, or to make sure you're not straying into some gray zones. So, at that time, Goldman was just a great place to work. It was a very hardworking place. That came somewhat naturally to me, but it tested me. And then when you take your first real, job, particularly Wall Street job, you just have to adjust to a different way of working. And no matter what you've done before, the intensity and the need to get everything right was just different. And that, like, going to Williams built a discipline in me that maybe, there was things I would have been sloppy about before, but just the precision. And the last thing I'll say is when you work really hard in an environment like that, you have the potential to always look at the rest of your life and say, I'm not really working that hard, even if you are. So I think that is good. I had that kind of work ethic, but being in that environment was just a really good professional foundation, developing professional skills, and in an environment where people were truly focused on kind of getting to the right answer and willing to have the dialogue and constructive debate to get to the better answer.
And after Goldman, you joined GTCR in 1996, and for the past almost 30 years, you've or around 20. You've worked your way up through the ranks. And so now to stage, you're co-CEO, managing director, alongside Dean Mihas. And I'm interested in if you had to pick one or two deals that you'd say are the most formative to you, had the biggest impact on you as a person,
Mhm.
what would they be? And I'd love to just hear the stories behind those deals.
Yeah, I mean, the one thing I'd say, I was fortunate to join GTCR when I did, and I had some fortunate things that happened in my career, including coming out of business school in 2000, which was a break in the market, but was a fantastic time to invest in private equity in the early 2000s after the market broke. So there were some fortunate elements, and there were some predecessors here who had gotten the firm to a great place that I'm a beneficiary of, and many people I worked from and learned from were very team oriented. So I'd want to emphasize that. That's fundamental to my success, our success is that commonality. I think that I had an orientation toward value. Definitely, found myself, reading, security analysis and different, value oriented, texts and then more common thing, more modern things like McKinsey book evaluation. These were things that were important to me, and I was grounded in being a value investor, and probably didn't appreciate growth as much. But I think what some of the more successful deals are deals that have been priced on a value basis, because rightfully that the risk return was value, but had a growth potential, and therefore could turn into a more spectacular investment because you bought something for a fair price, but then you were able to make it a more predictable growth business that would therefore earn a much higher multiple. And that requires being a bit contrarian and also seeing value under the surface, which is part of being contrarian. One investment was an investment we made in a company called Verifone, which makes point of sale terminals. That was, a growing electronification of payments was a theme that we were investing in behind in credit card processing and likewise. So we knew the industry, but this business was just a mess, and it had been part of Hewlett Packard and had bad financial back office and bad data. But I believed in the manager.
Before we go back to the episode, I want to take a short break to talk about my sponsor, Row. The Generating Alpha podcast is presented by Row, the all-in-one banking platform for startups. Thousands of startups like Perplexity, Product Hunt, and more use Row. You get everything you need to manage your startup's cash. Fast banking setup, cards with up to 2% cash back, and yield that turns company cash into extra runway. All super important in the early days of launching. But the thing founders really love about Row is their team. They're obsessed with helping founders disrupt the status quo and will go to the end of the earth to help them to do so. And exclusively for Generating Alpha podcast listeners and viewers, you'll get a $1,500 statement credit plus a ton of exclusive perks when you manage your company cash with Row. Terms and conditions apply. To learn more, visit rho.co/generatingalpha. Row is a fintech, not a bank. Checking and card services provided by Webster Bank, member FDIC. See reward terms for details. Thank you, and back to the episode.
We based on our industry work could develop conviction, even though the data wasn't very good, that the demand was there. And on the basis of that sustainable demand, that was fundamental to that, because the numbers were just kind of wild and you couldn't really quite make sense of what was going on. So there's, in lots of investments, there is a little bit of a jump of faith somewhere. It's an educated bet, but you have to think about what's knowable, what's not knowable. In this case, some of the data was just messy. Ultimately, that proved to be, we were investing at a very good time when values were depressed. This company had gone through, some, not so great leadership prior to this new manager coming in, and there was a lot of potential in the industry, we thought, for proliferation of those devices. And then we had some luck along the way where some trends, more broadband helped that business, better video terminals helped that business, faster processing chips and cheaper process. So at some point we got into a virtuous cycle where technology change was allowing us to deliver a better product, which was increasing the demand for the product and increasing the prices at which we could charge for the product. So, part of that was absolutely, lucky, but you put yourself in a place to get that favorable outcome if you provide for the base return that we think this is a highly recurring business that will be around even if we can't we don't have 100% confidence in the numbers.
You spoke about growth potential. How does GTR specifically approach a business to make sure that kind of growth potential
Yeah.
materializes?
Yeah. Well, the first, I mean, one thing I'd say, private equity, I think, is a somewhat unique asset class in the sense that you can impact outcomes. And that's true in some other categories, venture notably, but venture is much more binary. And private equity, you have a potential to work closely with the management team. That's very much our style, collaborative, constructive. We're working on a team together to make change in a business to make it a better business. And that is an incredible advantage relative to trying to be, stock picker and not having that advantage. And it's more fundamental too, in the sense that I'm much less good at predicting where the market's going to go. Maybe, I don't know if anybody is, but certainly that's not, what I think is my forte. But getting into complexity, getting into the people issues, and I especially say when we look at an investment, we're looking at what can we and management do with this business to make it a better business, and we're looking at it over a long horizon. Some of the things to your specific point might be, gee, we're not growing as fast as the industry because we don't have this product capability or geographic coverage or leadership or we're underpricing or delivering bad service, whatever it is. Most of the businesses we invest in, there's an opportunity for enhancement. I would say every business has an opportunity for enhancement, but we're definitely looking at businesses where we say this is a very good business, but it can be even better, and we're gonna work closely with management to make those changes. And then when that starts working, like the Verifone example, it can become a virtuous cycle where you're executing well, you take on some challenges, you execute against those, and then you take on some more challenges, execute against those, and then more and more, and then over time you've addressed a bunch of the opportunity set in the business to make it just that much more of a growing, predictable business, better competitive barriers relative to other competitors. There's just joy and satisfaction, I think, from that focus on excellence, focus on improving the business. So that's very much the way we invest in GTCR. I think that's the opportunity in private equity. I think how different firms impact outcomes varies, and some impact outcomes in very different ways than GTCR does. But that's, I think, what's really special is and also just feeling connected to the business. As I thought about being an investor, I thought about trading stocks or participating in markets, and had that opportunity to go more down that route. But I thought that would be less rewarding back to the economy, the market capitalist economy, of feeling like I'm directly contributing to value creation and growth in a business. That was important to me then, and remains so.
And we just spoke about the investment period where GTCR adds value, but I'd love to take a step back and kind of zoom out in the sense of, we'd love for you to describe kind of a typical life cycle of a deal for GTCR. So how you source, what draws your attention, how does the diligence process work, what the holding period looks like, and then ultimately how do you decide to exit?
Yeah. I mean, this is not, hopefully not trite, but there's no typical, and that's important. Uh, our industry has become very process based. You've got bankers, they run a process. A process takes 3 to 5 months. There's Q of E. There's all these standard process based things, and that's important. But that's not how deals get done. At least at GTCR, we're not a deal shop in that kind of mindset of just getting books in the door and reacting to them. We are deep in our industries, working really hard to know the different players in the industry, different companies in the industry. What are the growth vectors? What's the opportunity? Hopefully, have some view of what's coming around the corner. But then, very importantly, knowing the managers and knowing talent, executive talent that we might work with. So a deal when a deal happens here, there is a serendipity element of, gee, we've known this management team for several years. Maybe they had a corporate owner, and we were hoping that the corporate would divest in a corporate carve out. Or, gee, maybe it was an entrepreneurially family owned business, and we thought we can back them to go to the next step. Or a business that had some really good people and really good potential, but needed a new leader, really needed somebody to step in and make that change. So whether we're backing the incumbent team or a new team, there's always got to be a sense of there's opportunity here with our capital, with our industry expertise, paired with management working together to create, to do something different. Nothing we invest in are we investing saying, let's just do exactly the same thing and keep going. And there are many investors that have that approach, and that's okay. But our approach is we've got a change agenda. And so we're looking for things that have that opportunity. And it's not a playbook in the sense that every deal is different. Every deal has some different attribute of how you might create value. In some cases, we really want to invest in the sales function. We think maybe it's got a good product, but the sales is not really that great, or we want to develop a different distribution channel. Or in some other cases, it's operational excellence and technology and technological spend. In some other categories, it's scale and market coverage. M&A can be an important component to that because if you want to add some product set or add geographic coverage, M&A may be a more effective way to do that. So typically we're deploying that as part of our value creation strategy. But I'd emphasize again, every investment we make, this is part of the problem solving. And really, the fun of the job is seeing what levers might we pull together to make this a more valuable business.
And I'm interested in you've been at GTCR for around 30 years now. And with that, so the rise of mega funds like Blackstone, like Apollo,
Yeah.
KKR, and even like in the private credit world, like Ares, Blue Owl, et cetera. How do you think the way GTCR thinks about investing as a whole has evolved over that time with
Yeah.
respect to how these gigantic mega funds have scaled?
I mean, I think that those are all really good firms. But the firms you mentioned are typically trying to do a lot of different things, and we are trying to do substantially one thing well, investing in private equity to build better companies with deep industry vertical expertise and a transformational agenda, a change agenda to improve the business. And so that we just keep focused on that. I think the growth in our industry, as exemplified by the growth of some of those firms, has also created the opportunity for us to invest across a much wider size range of deals. So, we might make an investment in a business that's $100 million enterprise value, and that can be great and have a lot of potential. And I'm involved, in the past year and one or two of those. Or we may invest in something that's got 5 or 10 or 20 billion of EV at the upper end. And what's important is that there's that value creation opportunity there. So we're much more, I would say, we're focused, more on the upper middle market, but we can stretch up to the large cap when we see conviction, but we also cover the middle market and into the lower middle market. And that's been an evolution of our firm as the industry has grown. We feel like the industry expertise that comes from covering all sizes is a tremendous advantage that very few other firms have. So that's fundamental. As is our change agenda and ability to make an impact on the business, which is at a higher degree than we think most private equity firms.
And in terms of building great businesses, there's a lot of people who try to do it, but few have done it as successfully as you guys have. What specifically do you guys think you're kind of, I don't know, this would be weird to say that, but best in the world at or world
Yeah, I
class
mean,
at?
I try not. We try to focus on excellence is hard to define, but when you're striving to it, so it's always aspirational, and that's what matters. And I think we focus a lot more on the inputs than outputs. I mean, of course, you want to drive great returns and great exits, but it's the things you do every day to improve the business that ultimately add up to that. If you're an athlete, you don't just focus on game day performance or how you do in the championship. You'll never get there. You focus on practicing and getting better and honing your skills and mitigating areas of weakness. So it's that everyday mindset, continuous improvement, I think is fundamental. But some of the other attributes, I mean, certainly leadership matters. I think leadership that uses data effectively, that understands their value proposition, that talks to customers and understands what customers want, that being going out in the world versus being insular is very important. I think companies that have really good ability to collaborate, but collaborate sounds like a fuzzy word. That means everybody's playing their role, And again, like the sports team metaphor, people have to know their role and be responsible for fulfilling that role. And a great management team that just clicks, it's just a finely honed machine. And those are teams of highly motivated, aligned people with common values and long-term orientation, making a difference, and we're working beside them and supporting them. That's an important component, as you say, or as I said earlier. It's great if some things go the right way, but all of our good or great investments always have challenge. I would say it's about how do you turn the adversity into an opportunity. How do you look at something, not and I think part of that's just motivational. It's a lot easier to challenge something or to address something if you think of it as an opportunity than a challenge. But if commonly, like if you're experiencing a challenge in a company, maybe your competitors are too. Well, if you do a better job of addressing it than they do, well, you're going to win in the marketplace. So I think it's having that mindset that you've always got to be getting better. We try to think like perpetual owners. I think that's another element. We understand we will eventually get liquidity. We want to return cash to our investors, but if you make all your decisions as if you're a short-term owner, you run the risk of kind of being a renter and not making the impact on the business. So it's important to have that long-term orientation. And then, in our experience, the exits take care of themselves. If you build a better business, you're likely to get a better multiple for it than you paid. You should. You've done the hard work to achieve that. So we've been fortunate in that respect.
And on the topic of exits, first of all, there's sometimes challenges within these businesses, but there are also challenges in terms of the greater market cycles. And in terms of exits over the past year, while it's been a relatively slow market, in terms of exits, you guys have done incredibly well and made some incredible exits. So I'm interested in terms of you guys have executed discipline across all kinds of market cycles, whether it's kind of very fatty and fluffy or whether it's really bad. I'm interested in what it takes to build that kind of consistency and
Yeah,
that discipline across all
yeah.
cycles.
Yeah. Well, I mean, we make mistakes, but we learn from our mistakes. You learn a lot more from your mistakes. We've got a lot of history. We've been around for 45 years. So you have to remember the mistakes you've made, and remember what got you there. Our industry can get carried away, has gotten carried away. I think we're living in the aftermath of that, of people thinking it's easy to build value. And when multiples were going up from, let's say, 2011 to 2021, there was a lot of, what some people call leveraged beta, where people were just doing better, multiples going up, people were getting liquidity, which, works for a while, but we have a mindset that we are in a cyclical business. And so we're always, when multiples are well above long-term averages and fundamental performance across the industry is well above long-term averages, and or interest rates are way lower than long-term averages, you have to think there's going to be mean reversion. And you have to think that, okay, back to the comment earlier, you're at a point in time. There is going to be a future past this. And so it's not easy, but one of the things I and others try to do here is kind of lean in the other way of the market cycle. When it was 2021 and things were kind of frothy, record high multiples, record low interest rates, high growth that was kind of a post-COVID cyclical phenomenon. It's trying to tamp down that enthusiasm. On the other hand, when it's 23, 24, and our industry is rationalizing and multiples have come down and people don't feel as great or broadly in the industry, that's where the opportunity is. So I think it's just kind of keeping balanced and recognizing that you're going to have periods where our industry gets overheated or markets generally, and other times when it doesn't feel as good, we tend to, when it doesn't feel as good, that's probably the better opportunity set. When it feels great, that's probably there's probably mean reversion coming in an adverse direction.
In terms of cycles, I'm interested in what are the kind of themes or sectors you're most excited about over the next 10 years?
I mean, the AI phenomenon is just a massive overlay to our companies and everything we do. It is something we're deploying a lot of resources against. You can never feel like you're doing enough. Fortunately, we have some really good talent and adding more talents, and we're deploying actively at our portfolio companies. I think that has the potential to really transform how industries and companies are operating. But in some cases, there's going to be a lot of value destruction, race to the bottom on pricing, or whole categories of activities that are essentially digitized. So we want to be mindful of those risks, but take advantage of those opportunities. And then, more broadly, we're in four sectors of the economy: healthcare, technology, media, and telecom, business and consumer services, financial services, and technology. Within each of those, we have many themes that we're playing that are specific to some industry category. For instance, in the wealth category, we're doing a lot in terms of serving high net worth and ultra high net worth, and delivering new products and services that support the growth of that demographic. That's an example. Or using technology to better manage investments for retail investors. That's another theme, that technology continues to evolve and let you do new things that better serve that target base. So those are just a couple examples from our financial services and technology area, but across the firm, we have many themes. What you're trying to do is find a business that plays into that theme that is also a great investment. So you don't want to we're not thematic investors in the sense we're just playing the theme. We are looking for the theme, which is almost fundamentally top down, but then looking at opportunities, we're very bottoms up, very granular. Because when you're buying control of a business, there's a lot of things you can get wrong. There's a lot of things you can miss. So you want to have that bottoms up granularity discipline when you're doing the actual diligence and evaluating purchasing your business.
And GTCR has thrived over the past 45 years, and you mentioned talent. I'm interested in how you think about hiring the next generation of talent to kind of carry on GTCR's legacy into the future.
Yeah. Yeah, I mean, we are in we're in a people business, and it's a very long cycle business in the sense it takes a lot of time to develop in this industry. Um, you also tend to see that people get quite a bit of responsibility stepping in, so they can differentiate themselves very quickly. But it's a long road, and we want to develop people along the way. I'm speaking for myself, I'm very focused on people who have done or exhibited something in their life where they made decisions and they overcame adversity. That those are it's agency is a very important attribute. People who feel like they can impact their life and whatever little part of the world that they exist in, that they have agency. So people who show that and have demonstrate that, that's very important to me, and that can be that you came from less affluent environment or immigrant environment, non-native speaker, or had some health issue, or had something you did in sports that was exemplary. But I'm just looking for somebody who's demonstrated in some attribute of their life a commitment and a dedication and resilience. And then there's obviously a lot of other attributes we're looking for, but you need to have that drive. You also want people that you like working with, right? We're a team-based environment, so that's an important attribute of the classic. Would you want to sit on a flight for 4 hours with somebody and chat and feel really good about that? And part of that's being grounded and being likable, and being real.
And I have one last question I ask every one of my guests. And the question is, I'm 16 right now. If you had to give one piece of advice to a 16-year-old today, it doesn't have to be career advice, it could be life advice, romantic advice, whatever it is. What would it be?
Yeah. Okay. Well, I'm not going to give you romantic advice. I have my own kids, and I don't give them romantic advice either. So I'll stay away from that. One thing I'd say is enjoy the journey. Again, I don't want to sound trite, but it's easy to get caught up in the next step, the next thing, and that I'll get to goals in a minute, but enjoy the journey along the way. That also means if you're enjoying it and savoring it, you're learning from it, as opposed to like trying to get through it. I do think it's important to have goals. Those can change. That's okay, and there doesn't have to be one, but it's important to have some direction you're working toward, versus feeling like that will just manifest itself in time. So, short-term goals, long-term goals, medium-term goals. I think goals are important to give direction. I'd say, make mistakes. Don't be afraid. I think some folks who want to be high achieving or accomplish things in life feel like they can't make mistakes. It's the opposite. You need to be open to making mistakes, particularly early in your career, but you need to learn from them. And you, as I said earlier, you learn a lot more from your mistakes than your successes. And then the last one, which I think would come through from the other comments, is just always be developing yourselves. I've seen great people who they do well, and but at some point they kind of flatline. Uh, there's always opportunity to do things better. I make mistakes every day. I try to focus on making fewer of them, or making different ones. But always be developing. Always, and part of that is always learning, because we are in a dynamic world and there's always more to learn. But I think if you maintain that interest in bettering yourself, bettering your understanding, it keeps things more interesting, and it'll lead you on a much more interesting path.
Well, Colin, it's been a pleasure having you on. Really appreciate it. And thanks again.
Likewise, thank you so much, and have a great day.